Good morning, students. Now we'll see the final accounts of a company. How to prepare the final accounts of a company. So the companies are required to prepare final accounts as per the provision of the Companies Act 2013. They should prepare and keep the book of accounts of every financial year at the registered office, which gives a true and fair value of the state of affairs of the company. So here, as per the section 129, at the time of companies, the annual general meeting, it is a mandatory for the board of directors, that is profit and loss of statement, balance sheet, cash flow statement, statement of changes in equity, notes to accounts. Cash flow statement is not a part of financial statement in case of one person company. Schedule 3 of the Companies Act 2013, that is the vertical format of presenting the balance sheet items and the classification of current and non-current items. Vertical format of profit and loss statement, which classify the expenses based on the nature. Elimination of the concept of schedule, and such information is now furnished is notes to account. It does not contain any specific disclosure for items in the Schedule 6 under the miscellaneous expenditure. The debit balance of profit and loss statement will be disclosed in the negative figure under the reserves and surplus and preparation of cash flow statement. General instruction for the preparation of financial statement is the Schedule 3 sets provide minimal requirement for disclosure of the phase of the balance sheet of the statement of profit and loss, that is the financial statement. The disclosure requirements specified in the schedules are in the addition to and not in the substitution of the disclosure requirements specified in the accounting standard prescribed under the Companies Act 2013. This is the format of the profit and loss statement, part 2 of Schedule 3. Here the first was revenue from operation, second other income, third total revenue, that is A minus B, revenue from operation minus other income, and then expenses, cost of material consumed, purchase of stock, changes in inventories of finished goods, work in progress and stock in trade, employee benefit expenses, finance cost, depreciation and amortization. So the total expenses is profit before exemptions and extraordinary item. And the sixth is exemption item, seventh is profit before extraordinary item, that is we have to minus the fifth and the sixth items, and the eighth extraordinary items, ninth profit before tax minus 7 and 8, and then 10 is tax expenses, current tax and deferred tax. 11th is the profit or loss for the period from the continuing period, and 12 profit loss from the discounting operation, 13 tax expenses on discontinued operation. This is a format which is new schedules given in the 2013 of the Companies Act. So now as per the balance sheet part 1 of Schedule 3 also, first one is the Schedule 1 says that the equity and the liability is a shareholder fund, share application money, non-current liability, and the fourth one is the current liability. This is the liabilities are divided in this column, and the asset, non-current asset and the current asset. In the non-current asset, fixed asset, non-current asset, deferred tax asset, and long-term loans and advance. So a share capital for each classes of share capital from the point of view, the number and the amount of shares authorized, reserves and surplus, long-term borrowing, short-term borrowing, other current liability, tangible asset. These are the items comes under this heading. So now we'll see the sum. The following is the trial balance of Alpha Limited. This is the question. We'll do the sums now. So now first we'll see the profit and loss account. First is the revenue from operation, second is the other column. Before we'll work out on the profit and loss, we'll see the notes. So the revenue from operation is 14,000, other income is 40, total revenue is 14,040, and then expenses, purchase 6,400, finance cost 400. So the notes is 6. Depreciation 10% of 15,200 is 1,520. Other expenses in the note 7, 2,400. So the total expenses is 10,720. Profit or loss for the period is 3,320. So in the balance sheet, the share capital authorized is 8,000. And the issued subscribed capital is 6,000. Reserves and surplus for the security premium is 800. Revaluation reserve 2,800. General reserve 2,600. Opening balance 1440. Period profit for the period is 3320. Less appropriation interim dividend is 360. So finally 4400. Long term borrowing 10% debenture is 4000. And then opening balance for the land is 4400. Closing add revaluation adjustment 2800. Total 7200. Plant and machinery opening balance 15400. Less disposed of 200 is 15200. Other income profit on sale of machinery minus sale of valuation machinery 80. Finance cost debenture interest is 400. Other expenses factory expenses selling expenses administrative, so totally 2400. So the note is dividend declared on 2nd April 20 into 2 will be accounting for the next financial year. So these are the balance sheet. So shareholders fund is 6000. The note we worked in here is 6000, and the reserves and surplus 10,600. Non-current liability note number 3 4000. Current liability 1040. So total liability there's 21,640. In the asset side, non-current asset is 17,600, and the other income, finance cost and other expenses, the note number 5, 6 and 7. So total is 21,650. So both the side of liability and the asset, the values are 21,640. Thank you.